Can I? What's the time? 2 more minutes. A very good afternoon, investors. You're now on KleverStock with me, Wan Izul, and I will be serving you the midday roundup with the latest market updates from this morning up until now. So we kick it off with Bursa Malaysia updates. Buying momentum on the FBM KLCI is accelerating as investor risk appetite improves. That's driven by renewed confidence in the global economy. The benchmark index gapped up to the psychological 1,700 point level on Tuesday, marking its highest point in 7 years. Now, this rally follows record performances on Wall Street, where the Dow Jones and S&P 500 hit fresh peaks as traders looked past recent anxieties regarding a federal investigation into Fed Chair Jerome Powell. As of 9 a.m. this morning, the FBM KLCI was trading at 7.3 points higher at 1,702.74. Malaysian banking stocks have been the primary engine for this surge, with several heavyweights hitting historical highs. Malayan banking Berhad, also known as Maybank, they surged by 18 cents to an all-time peak of 11 ringgit 14 cents. While RHB Bank followed suit, rising 16 cents to hit its own record of 8 ringgit 6 cents. Other major gainers included CIMB, which climbed 8 cents to 8 ringgit 29 cents, and Public Bank. They added 5 cents to reach 4 ringgit 64 cents. Now, the broader Kuala Lumpur Financial Services Index subsequently charted a record of its own, rising 0.9% to 20,395.39. Now, TA Securities noted in a technical outlook that strengthening momentum suggests the index is poised to extend these gains in the immediate term, although geopolitical uncertainties could still temper overall appetite. Now, the research house identified immediate resistance at the October 2015 high of 1,727, with further upside hurdles at 1,759 and 1,804. On the downside, support remains intact at the September 2016 low of 1,645, with stronger floors at 1,610 and 1,564. Market activity was also heavily influenced by news of Sunway Berhad's proposed 11 billion ringgit takeover of IJM Corporation Berhad. This announcement triggered a surge in IJM's share price, which jumped 11 cents to 2 ringgit 86 cents on an active volume of 20.56 million shares. Now, conversely, Sunway's shares slipped by 14 cents to 5 ringgit 46 cents as investors reacted to the massive cash and share deal. The proposed merger aims to combine the two construction and property giants into a unified powerhouse with a potential market value of nearly 50 billion ringgit. We'll have more on that later. Moving on to our local currency and foreign exchange. The ringgit maintained its upward trajectory on Tuesday morning, opening stronger against a weakening US dollar as global markets grew increasingly concerned over the independence of the United States Federal Reserve. At around 8 this morning, the local currency appreciated to 4.0580 or 4.0685 against the greenback, a notable improvement from Monday's closing rate of 4.0605 or 4.0660. Now, this shift in sentiment follows a 0.24% decline in the US dollar index, which slipped to 98.894 points. Now, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid observed that the greenback is feeling the weight of political friction in the US, particularly regarding the Fed's monetary policy stance. Now, he noted that the constant pressure from the Trump administration on the central bank has clouded the outlook for the dollar, especially as the Fed remains hesitant to aggressively ease interest rates. Dr. Muhammad Afzanizam told Bernama that the current tension stems largely from the Fed's reluctance to loosen its monetary policy, a move that has historically provided support for the dollar. Afzanizam explained that, as such, this seems to benefit the local unit in the short term, with the ringgit versus US dollar expected to range between 4 ringgit 5 cents to 4 ringgit 6 cents today. Now, this range reflects a period of short-term benefit for the ringgit as investors recalibrate their expectations for US yields. The local note also performed well against a basket of major global currencies at the opening bell. It strengthened against the Japanese yen, moving to 2.5677 or 2.5747. It also edged up against the euro to 4.7345 or 4.7467. While it showed slight weakness against the British pound, the overall trend for the ringgit remained resilient amid the broader global currency reshuffling. Now, regionally, the ringgit traded higher against its ASEAN peers. It inched up against the Indonesian rupiah to 240.7 or 241.4, and it also saw gains against both the Singapore dollar and the Thai baht. Against the Philippine peso, the currency remained flat, mirroring its close from the previous day. Now, this regional strength highlights the ringgit's position as a preferred emerging market currency during periods of US dollar volatility. The focus for currency traders today will likely remain on US political developments and any official rhetoric from the Federal Reserve officials. As Dr. Muhammad Afzanizam highlighted, the crux of the tension is the US will continue to be a primary driver for the ringgit's performance in the immediate term. Analysts believe that as long as domestic economic indicators remain stable, the ringgit is well positioned to capitalize on any further softening of the greenback. Now for some local economic news. Foreign investors returned as net buyers to the Malaysian equity market last week, ending a 4-week selling streak with a net inflow of 42.5 million ringgit. Now, according to a fund flow report by MBSB Investment Bank Berhad, for the week ending January 9th, 2026, foreign participation saw a significant recovery, particularly toward the end of the week. Now, the week began on a cautious note with 3 consecutive days of outflows, 19.8 million ringgit on Monday, a peak of 153.4 million ringgit on Tuesday, and 55.7 million ringgit on Thursday. However, these were offset by robust buying on Wednesday at 80.4 million ringgit, and a surge on Friday, which recorded the week's largest single-day inflow of 191 million ringgit. Now, sectoral analysis revealed a strong foreign preference for industrial products and services, which attracted the highest net inflow of 206.7 million ringgit. Now, this was followed by the property sector with 69 million ringgit and then technology with 63 million ringgit. Conversely, the utility sector experienced the heaviest net selling at 207.5 million ringgit, followed by plantation at 123.5 million ringgit and real estate investment trusts or REITs at 30.2 million ringgit. Beyond foreign activity, local institutions continued their support for the market, extending their buying streak to an 8th consecutive week with a net inflow of 126.6 million ringgit. In contrast, local retailers remained net sellers for a 6th straight week, offloading a total of 169.2 million ringgit. Market liquidity also saw a healthy boost, with the average daily trading volume or the ADTV rising across all groups, led by a 67.3% increase from foreign investors. Continuing with more economic news updates, corporate Malaysia is entering 2026 with a strong tailwind as analysts project robust earnings growth driven by stabilizing ringgit, persistent foreign direct investment (FDIs), and a long-awaited recovery in the technology sector. Now, this optimism comes after a volatile 2025, with market experts pointing to artificial intelligence and data center infrastructure as the primary engines for this year's corporate performance. Now, Rakuten Trade Head of Equity Sales, Vincent Lau, noted that the local technology sector is finally emerging from a delayed recovery cycle. He pointed to rising prices for random access memory or RAMs and the strengthening share prices of global leaders like Micron and Intel as leading indicators for Malaysian players. Now, Lau also highlighted that the global demand for AI-driven automation has transformed servers and machine learning capabilities into a necessity for local businesses, fueling a surge in capital expenditure within the electrical and electronics segment. Lau underscored the urgency for digital transformation, stating that globally and locally, there's a demand to purchase servers to automate their processes and incorporate machine learning as a part of capital expenditure spending. Now, beyond tech, the construction and consumer sectors are identified as key beneficiaries of the current economic climate. Malacca Securities Head of Research, Louis Low, echoed this positive outlook, noting that construction firms, particularly those integrated into the data center value chain, are poised for continued growth. Now, this is further supported by government spending on critical infrastructure like flood mitigation and road projects. Meanwhile, the consumer sector is expected to thrive as a stronger ringgit lowers import costs and the Visit Malaysia 2026 campaign begins to draw significant tourist spending. Mr. Low observed that the growth of consumer and domestic-driven markets will be the main theme for 2026, though he cautioned that a sudden weakening of the ringgit could shift sentiment back toward export-oriented companies. Now, despite the broad optimism, some sectors face a more challenging environment. Now, the furniture and automotive industries are grappling with intense competition from Vietnam and China, respectively. However, Lau affirmed that the affordable automotive segment, led by national brands Proton and Produa, should remain resilient. Market sentiment is also being bolstered by a reversal in fund flows. After staggering net outflow of over 22 billion ringgit in 2025, the early weeks of 2026 have shown signs of a foreign investor homecoming. Now, as companies enter the final quarter of the financial year, analysts are bracing for a strong earnings finish, balanced only by the price losses some exporters may face due to the ringgit's rapid appreciation. We'll now take a short break, but don't go away. We will return shortly with corporate news developments. We'll see you soon. Welcome back to the Midday Roundup. Let's continue with some corporate news updates in a landmark move that has reshaped Malaysia's corporate landscape. Sunway Berhad has launched a conditional voluntary takeover bid for IGM Corporation Berhad, valued at approximately 11 billion ringgit. Now, the announcement made through a filing with Bursa Malaysia on Monday, January 12, 2026, follows years of market speculation and a series of high-profile denials from both companies as recently as late 2025. The proposed acquisition seeks to acquire all 3.51 billion shares of IGM Corporation at an offer price of 3 ringgit 15 cents per share. Now, this represents a significant 14.55% premium over IGM's last closing price of 2 ringgit 75 cents and a nearly 28% premium over its 1-month volume-weighted average market price. Under the terms of the deal, the consideration will be settled through a mix of 10% cash and 90% new Sunway shares, which are being issued at a price of 5 ringgit 65 cents per share. Now, during an impromptu press conference held in Petaling Jaya, Sunway's top management clarified the sudden shift in stance after months of silence. Sunway Chief Financial Officer Clement Chen noted that the previous denials of engagement were factually accurate because the group only first made formal contact with IJM on the day of the announcement. He described the move as a unilateral offer made directly to IJM's shareholders. Chen explained that prior to this, there had been no contact with their management. This is a unilateral offer from us to IJM's shareholders. Now, the merger is set to create what Sunway President Anwar Taib describes as a national champion with a combined market capitalization nearing 50 billion ringgit. The enlarged group would boast a massive land bank of 2,300 hectares and a combined construction order book exceeding 13 billion ringgit. Now, Anwar emphasized that the move is timely as Malaysia positions itself as a strategic hub for global trade shifts within ASEAN, particularly in the high-growth sectors of data centers and industrial infrastructure. Anwar said that during the briefing that this consolidation will create a very strong, balanced, broad and deep company that all of us should be proud to call a Malaysian company. He further reassured the workforce that there are no current plans for layoffs or major restructuring of IJM's existing business units, which would continue to operate as a separate subsidiary within the Sunway Group to maintain operational continuity. Now, the deal is currently conditional upon Sunway securing more than 50% of IJM's voting shares, while analysts from Hong Leong Investment Bank and TA Securities have recommended that shareholders accept the offer due to the immediate value crystallization and future upside. Some firms like Kenanga Investment Bank have expressed reservations, suggesting the offer price may undervalue IJM's long-term potential. Major institutional shareholders, including the Employees Provident Fund (EPF) as well as PNB, will be critical in determining the success of the takeover. If the offer reaches the 90% acceptance threshold, Sunway intends to invoke compulsory acquisition provisions to delist IJM from Bursa Malaysia. Barring unforeseen regulatory delays, the transaction is expected to be completed by the third quarter of 2026. Now, this milestone is being watched closely by the regional investment community as it sets a new benchmark for large-scale consolidation in Southeast Asia's property and infrastructure markets. Up next, we have some business updates. Malaysian car manufacturer Proton Holdings Berhad is actively investigating potential business avenues in Algeria, with a focus on establishing dealerships and setting up local assembly operations using completely knocked down or CKD kits. Now, this strategic interest in the North African nation's automotive sector is designed to align with the current Algerian government policies that prioritize and encourage domestic vehicle production over imports. According to Dato' Rizani Irwan Muhammad Mazlan, the Malaysian ambassador to Algeria, the national automaker is specifically searching for investment opportunities that involve manufacturing and the formation of strategic local partnerships. To facilitate this exploration, Muhammad Azwan Muhammad Noor, who serves as Proton's regional manager for North Africa within the International Sales Division, recently conducted a visit to Algeria. During his stay, he conducted comprehensive studies on the various investment and business possibilities currently available within the country's evolving automotive landscape. And finally, we'll be wrapping it up with some major corporate developments and deals across Malaysia. At number one, of course, is the main story that everyone's been looking forward to. Sunway Berhad is proposing a conditional voluntary takeover offer to acquire all shares in IJM Corporation Berhad at 3 ringgit 15 cents per share, valuing the construction and property group at about 11 billion ringgit if the offer is fully accepted. Our next headline, Telkom Malaysia Berhad said its joint venture with Nexra has secured a multi-year electricity supply for a planned 280 megawatt data center campus in Iskandar Puteri, Johor. Our next headline at number 3, Lionson Fleet Group Berhad's unit, Icon PI1 Incorporation, has disposed of the Yinson Hermes anchor handling tug and supply vessels for 40.7 million ringgit. Up next, HE Group Berhad, they've secured a 12.6 million ringgit contract to undertake power distribution system works for a Malaysia-based electronic products manufacturer. Our next headline, Vantris Energy Berhad's indirect wholly owned subsidiary, Sapura Nautical Power. They will divest its 40% equity interest in L&T Sapura Shipping Private Limited to its India-based joint venture partner, Lawson & Toubro Limited, for approximately $30.5 million US dollars. And that, ladies and gentlemen, is a wrap for the Midday Roundup with me, Wanizul, right here on KleverStock. Thank you so much for choosing us, investors. Hope you have a wonderful day ahead. Stay tuned for our upcoming live stream programs and have a good day.